What's going on, guys? Welcome back to another video of price action trading, and today we're going to talk about what to really do when you don't know how to trade the market. You are very confused with the current price action. You cannot really identify what's going on. You're fairly confused because if you're just starting out trading, there can be a lot of information coming at you from the market, and you cannot really dissect it the way you want to. So normally, we are trying to identify what the market structure is looking like. We are trying to find the bigger patterns, the bigger trend lines. It is a trading range day. It is a downtrend or an uptrend. But there are days where it's very hard, even for experienced traders, to really know what exactly is going on. And the only solution to stay on the right side of the market and to really not get lulled into bad trades is basically to draw the shorter term trend lines and follow the shorter term trend lines rules. I'm just going to recap it. The trend line rules are basically saying that after the break of a trend line, there is most likely going to be a retest of a new extreme. So just as an example, we are working in a downtrend lower. Prices broke the downtrend bearish trend and made it 2 legs to a new low. Let's measure these legs. Usually the legs can be measured. This is not quite measured, but as you can see, these are 2 legs to a new low. So from this point on, when prices break the trend line and we made a new low, especially 2 legs, if you made 1 leg to a new low, there may be some momentum still going in that direction, but after 2 legs to a new low, now there is at least a correction or maybe straight up reversal. And the same thing happens in an uptrend like this. Prices are working higher. You can find the trend line from the first few swings, and prices are fitting neatly. This is the key to shorter term trend lines. When are you trying to find the bigger channels, you can kind of get away with prices not fitting perfectly. But when it comes to the shorter term trend lines, you really need the prices fit nicely, and you need prices to be hugging the trend lines perfectly. So just take a look how I drew these, and pretty much all of them, or at least most of them, played out. You can see this bullish correction working higher, break, 2 legs to a new high. Now it's time for reversal. We're working lower, we spike through EMA, break, big massive move to a new low, we reverse from here, we're working higher, break, new high. This was the only time we didn't get a break and a new low, and there's a reason for this as well. I'm going to get to this, but this is because of the overshoot. Once you get overshoot, that means the momentum in other side is going to be that strong that there might not even be a retest of a new low. I have mentioned it in my previous videos, but I'm just going to mark the trades and let's talk about the trades. So like I mentioned, we started out with the prices working lower, break, new low, and then we were working higher and we spiked through the EMA. This is normally a sign of a reversal pattern. So from this point on, this is starting to look like a trading range day. We are moving up and down, up and down. Even though with this break and a new high, I still took this trade. And when I was trading the bar, I actually had much better and bigger bullish reversal bar. After you reload the chart, you can actually, the bars may change a little bit. But I took this trade because this is according to our rules, high probability trade. This is at the key entry point. This is the new low, this is the new high, pullback, first entry, pullback, second entry. It is at the EMA. We made a double bottom at the EMA and we have a break and a new low of this correction working lower. So I was really feeling it. Even though with the break of a new high, this leg was fairly steep and there most likely going to be a second leg. So this was a really good trade to take because it is at the key entry point. Finally we made a second leg to a new high, so you really want to be careful. You really need to stop thinking long at this point. And you can see prices just kind of chopped around, but you don't want to short this as well. This is starting to look very congestion like, and you don't want to trade the small little trading range. This is a congestion, smaller trading range. Prices broke lower through EMA. We shot through EMA and we pulled back. But once this bar formed, now this is the time when I drew my trend line and I just copied it lower, and you can see it fits on the lows and on the highs. So this is how you know the trend line is valid. It fits prices nicely and neatly. Nevertheless, this is just a first entry from this point. But once prices tried a second attempt by the bulls to go higher and we got shut down from the trend line and from the EMA, this is a key entry point as well as a very high probability setup. So even though the signal bar is not good, I really like taking a chance on this one. But if you see the signal bar like this is not a bearish reversal bar by any means. So I guess, you know, you can be a little bit hesitant, but the key entry point is so strong that you really want to take this trade. And true to its form, prices break the trend line, and there you now are expecting to make a new low, and it happened like prices most of the time do. We spiked through EMA quite big time, so I was quite thinking we might not even retest the new low, but the bears instantly, you know, sold the market, and we just chopped below the EMA, and this was the first pullback below the EMA. I just marked it. I didn't take this trade, but I just marked it because after such a big bearish bar, this is a huge, you know, rejection of all the bullish activity. Such a big bearish bar, and we couldn't close above EMA. We didn't even close above EMA, so we are working below the EMA. So this is the good reason to take it. It is a perfect, you know, bearish pin bar. So for that reason, I think it's really good. But now with this second entry, this is a new high, pullback, first entry, pullback, second entry. Market always moves, most of the time moves in twos. So this is a two-legged pullback to the EMA, and bulls try to go long 2 times. And once, you know, this is our human behavior. Once something doesn't work once, people always try the second time. But once it doesn't work second time, we're done. This is how human psychology is working, and this is why, you know, the second entry worked this way. And this is why Al Brooks actually discovered the system early, you know, 20 years ago, because the human psychology never changes. You can see even now, almost at the very end of 2020, the second entry is still valid. Nevertheless, nice big bearish bar, felt second entry long. According to our rules, you want to go short here. It was very tempting to take these shorts as well, but at this point you have a new low, and you're, you know, shorting the very low of this move, and this is not a key entry point. This is not a higher probability setup. We want to wait for higher probability setup as much as possible. So prices, you know, sold off massively. I didn't really expected it to happen like this, but nevertheless it happened. And once again, we spiked through the reversal. Look at the how EMA didn't even put any rejection. We spiked through EMA, and the EMA serves as a stepping stone sort of. Prices pull back and step on this EMA, and EMA is holding. This is a reversal pattern, and this serves as a setup for your trend line. So you draw the trend line, you put it to the other side, and prices are fitting fairly neatly. You can see we confirm the trend line right here. We have a break, new high. So at this point, you have a break, new high, and a second attempt to make a new high, and prices, you know, rejected the bullish momentum again. So this is where you want to be looking for shorts, because this bullish correction has played out, and this is the theme for the day. The short-term trend lines are keeping you on the right side of the market. It's very tough to find some bigger pattern. Yeah, there might be something like this, looking at this now, but, you know, I don't think this is valid because it doesn't fit from the lows that much. Maybe it actually fits here. Maybe this is the bigger pattern that I just missed during the day. But yeah, this looks actually kind of valid. This gives more credence to this trade. I'm just gonna delete this because, you know, it's not that obvious to find this bigger pattern. The shorter term trend lines will guide you safely during the day, any market you trade. So this is the new high we made. This high is higher than this high, and this high is higher than this high. So this is the highest high of this move. We're working lower. First entry, first attempt by the bulls to rally market higher, and it failed. It got rejected. Look how rejected strongly it got. Instant spike through the EMA. Little pullback. Second attempt by the bulls to go higher, and a second, and it failed. And this is our chance to trade. Failed second entry long once again. Similar pattern here. First entry, second entry, new high, first entry, second entry. So this is a, you know, the same pattern as this repeat pattern. So you want to take this bar. Even though the bar is not perfect, you want to take the trade right here because there's a failed second entry long, and this correction played out with the break and a new high and a double top from here. So we're working lower. Prices pull back to EMA and trend line again, but, you know, at this point you should have entered here at the failed second entry long, and you really have to follow the rules, because now, even though it worked here, you know, you never know, next time it may not work, because this is just a third entry long, and that's really not a thing, you know. This is not a reliable setup. So even though it's off the trend line, I'm not a big fan of this. I like only the higher probability setups, and the prices work all over. And here's a key moment that happened today. I took this trade and I got trapped here, and I thought I outsmarted them, but you know, they outsmarted me here, because I knew once you have a overshoot, you're most likely gonna have a reversal to the other side, and you're most likely not gonna retest a new low. So with this reversal, there is a big chance that we may not retest the new extreme. But so once I saw this bar, actually I had to change my EMA color. My template is not saving properly. It always, you know, goes back to yellow EMA. So I apologize to you guys. I have to, you know, save it properly. I don't know why it keeps going back, and I just, you know, I've been trading with yellow EMA for so long that I don't even realize that I need to make it blue so it looks better on video. Nevertheless, when I saw this bar, I knew that I shouldn't take it. Even though it is from the EMA and trend line, I knew I shouldn't take it. This is most likely trap. But look how tempting this looked. First entry, second entry, double top at the EMA. Trend line is still holding, second entry short, and it is a perfect bearish reversal pin bar. So even though I knew this would happen, and you know, this is the mental failure on my part, I knew that I was gonna get trapped on this bar. So I was strong here mentally. I didn't take this bar, but you know, they got me here. They trapped me even more. They really, you know, this was a good bait by the pros, and unfortunately they got me here. Even though I knew with the overshoot I should be looking to go in, you know, in the other side, but you know, that happens in other direction. So this was my loser for the day. And once again, you can draw the short-term trend line. You're working higher, you get a bounce from the trend line. This swing served as a setup for the trend line, and this, you know, confirmed the trend line. It is just a first entry, but it is such a nice bullish reversal bar. EMA is holding, trend line is holding, so I think you want to take it. And the only reason, you know, I want you to take this if you had better signal bar, because this is a first entry, pullback, second entry. We triggered first here above this bullish bar, and then we triggered here above this bullish bar. So this is a two-legged pullback to the EMA and the second entry long. But the signal bar is, you know, horrible. But if you had better signal bar, you know, it's according to rules, and you're waiting for break and a new high. And once again, it happened perfectly. So this is why the short-term trend lines are very legit. And you know, if you're a beginner, if you just learn to trust this, because a lot of traders, they don't trust this, you know, perfectly. They are afraid, you know, to follow the short-term trend lines because they're afraid that the bigger pattern might trap them. But that's most likely not going to be the case. The short-term trend lines are, you know, almost the most powerful tool as a trader you can have. So definitely follow these short-term trend lines, use them as much as you can. And this was the bigger picture for the day. You know, overall it's looking like kind of trading range day, but you know, not that clean, you know, on the bigger picture. And this, like I showed, this channel might be valid. There's some validity to it because we are bouncing from multiple sides here. Let me see if I can make it. Yeah, this is even better. This is even better. Yeah, this is looking nicely. Nevertheless, so always draw the short-term trend lines, and don't forget, study the chart after the fact. So this is the way you will learn this, because once you study this after the fact, once you're trading in live, you will get that flashback memory. Oh, I actually saw this, you know, last week when I was studying my charts, and you will be able to recognize it in real time. You know, this is the skill just like any other, and takes hard work just like any other. So hit the like button if you liked this video, if you think it was helpful, and I see you guys in the next video. Stay safe, guys. Bye, guys.